All right, everybody. Good evening and welcome to today's session. Now, before I go ahead to get into what we have for you guys today, I want to be sure that everybody can hear me clearly. So if you guys can hear me, please let me know in the chat. If you can hear me, please let me know in the chat. And welcome to today's session. Now, before we get cooking with the charts and with the fundamental analysis today, you can go ahead and drop in the chat where you're watching me from: Lagos, Abuja, Port Harcourt, school, home, wherever. Even if you're on your bed right now, let me know in the comments. And if this is also your first time, joining us, taking part in our webinars or live trading sessions, please let me know in the chat as well, so I can go ahead and give you the warmest welcome. You have to know that you've joined a space where we don't just trade and teach, but we also ensure that you grow. All right. So let me know in the chat if you guys can hear me. Warmest welcome. Once again, welcome everybody. Quick disclaimer. Let's put that back. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general markets commentary and does not constitute investment advice. Now, while you guys are letting me know about yourself, let me go ahead and give you guys a brief introduction to who I am. My name is Ambrose Ebuka. I have 6 years experience in the markets. I trade with precision. I focus on combining swing and scalp strategies to, capitalize on opportunities in the market. And the main pairs that I trade are gold, GBP/JPY, and GBP/USD, where I hit above 85% accuracy and backtest to stay razor sharp. Now, for those of you just joining, welcome to the session. Guys, we called out a trade idea earlier today on gold and GBP/JPY in the Octa Nigeria Telegram chat. So after today's session, if you're not in the chat, do well to join in the chat so you don't miss out on not just the signals, but also the analysis that we give you guys to potentially understand how this market works and make a profit for yourself as well. All right, so today we're going to look at the economic calendar as usual. We'll talk about zone trading as well. I'll give you guys an introduction to what zone trading is. We'll talk about the dollar index and gold as well. If you have other pairs that you want me to analyze, you can also let me know in the chat. We'll look at the psychology of almost there, and this has to do with, building up your psychology, preparing you for the month of September, guys. Again, this is our first session, my first session with you guys for September 2025. It's amazing. I'm going to give you guys 10 tips that can improve your psychology and improve your trading as well. Now, this session is going to last for about 45 minutes. You can use the YouTube live chat that you're already using right now. I can see your comments. Welcome, everybody. Welcome, Michael, Alimu, Augustus. Welcome. The session is going to last for about 45 minutes. You can use the YouTube live chat to ask a question during this session, and I'll constantly check to answer all your questions. Once again, guys, welcome to the session. Welcome to today's session. I told you guys earlier to let me know where you're watching from, but again, everyone, welcome to the session. Now, I'm going to ask you guys a question before we get started into the strategy, and also we go over the chart. I'm going to ask you guys a question, right? How many of you have actually opened a trade and then everything looked good, the trade was going well, but within a couple of seconds, the price just took off in an opposite direction and the trade went against you? If you've experienced that, let me know in the chat. You did your analysis, it was looking good, setup was nice, you got into the trade, everything was going well. All of a sudden, you saw a big spike. It's always one big candlestick that takes you out of the markets, and the market started going in the opposite direction of what you wanted. Let me know in the chat if that has happened to you. If you've experienced that, let me know in the chat. So you see, most times, it's not that your strategy is failing. It's probably the fact that something happened in the market that you did not know about. And that something is usually the economic calendar. Sometimes even days or weeks before. Something that you would have known about on that day if you got into your economic calendar and understood exactly what was going to be happening that day. And that's why before I go into the charts, I like to look at the economic calendar, and I'm going to show you guys what I look for and how I analyze and understand what's going on fundamentally in the market. Now, remember, this is going to be a very interactive session, right? Always use the live chat to ask me your questions. I'm constantly looking at the live chat to see if you guys have questions, and I'll answer them all. So by the end of this live session, you're going to understand exactly how to use the right tools, not just the economic calendar, the right tools in the market for your technical analysis as well. And you can use that to make confident and comfortable informed entries. All right. So let's get to the economic calendar. I believe you guys are already set up for that. So let's go over the Octa economic calendar right now. So to access this calendar, one of the ways you can do that would be to go through your Octa trading app, right? At the navigation menu, you'd see the option for economic calendar. You can use that, or you can use the official website that you can see, that you can see up here. And then you come down to analysis and education, and you want to come down to economic calendar, and the economic calendar loads up. Okay. Now, if this is your first time, using the Octa economic calendar, you would usually see it like this, right? You're going to see a lot of economic events, and that's because by default, you would have low impact and medium impact events added up in the economic calendar. Now, if you're a beginner trader, you're just getting started with the market, you can leave it this way just because you should understand the definitions of these things, even if it's a low impact event, for example, the unemployment rate month over month, right? Even if it's the low impact event, you can just keep it there for the knowledge, right? See what if it looks like, see what it feels like to trade in the market where there is a low impact event coming up, there's a medium impact, there's a high impact event, right? Just try to get familiar with this various impacts, and then when you're comfortable with the knowledge that you've gotten from them, you can now focus on high impact. For me, I like to focus on high impact events, but again, if you're just getting started, just keep the medium and the low for the knowledge, right? So what I'm going to do now is to filter the impact to just high impact events so that we can briefly talk about it today. Other settings that you would want to do is to make sure the time range is set for that day. If you want to extend it to the week, it's also cool. I mean, you get to see for tomorrow as well. But we're going to keep it for today just so that we can focus on this 5 high impact events today and move on to the charts. Time zone has to be in your current time zone, right? So you don't miss out on the economic event, okay? And that's it, filters. Now, to understand exactly what these events mean and the impact they would have to the currency that is subject to these events, all you have to do is, for example, look at the trade balance, right? What currency would it affect? The Australian dollar. And then you just click on it, and Octa has a definition for you to understand what this trade balance is and how it's going to impact the Australian dollar. You can see here, if a steady demand in exchange for Australian exports is seen, that would turn into a positive growth in the trade balance and should be positive for the Australian dollars, right? So we're going to do it together just so that I'm sure you guys are following. Now, this is the ADP employment change. Let me know in the chat, what currency does this affect? The ADP employment change, what currency does it affect? Let me know in the chat. If you know the answer to that, let me know in the chat. The ADP employment change, what currency does it affect? This is the. If you know the answer to that, let me know in the chat. The ADP employment change, what currency does it affect? Now, if you said the US dollar, you're correct, right? So all you have to do is to just click, get the information, and then pay attention to this last sentence because this is the most important. It's all important, but this is the one that tells you what to do and how the US dollar is going to react. So a high reading is traditionally seen as bullish for the dollar, while a low reading is seen as bearish. Obviously, we had a low reading here, and that would be bearish for the for the US dollar. But we're going to, I'm going to walk you guys through this one after the other, and we're going to start with the Australian dollar. If you're ready, the trade balance month over month. If you're ready, let me know in the chat. You can type I'm ready and we're going to get started. So we're going to kick things off with the trade balance. And the trade balance is simply the difference between what a country sells to the world and what it buys, right? What it exports and what it imports. So if the exports are bigger, we call it a surplus. If the imports are bigger, we call it a deficit, right? It's that simple. Okay, so if it exports more, surplus. If it imports more, deficit. Now, if you look at today's numbers, you see that Australia printed a 7.3 billion Australian dollar surplus. The forecast was only 4.9. Last month it was 5.3, right? Now you can see that this is a massive bit. So I'm going to throw the question in the chat for you guys. What do you think happens to the Aussie dollar, right? What do you think happens to the Australian dollar when foreigners are buying more goods like coal, gas, iron ore? What happens to the Australian dollar? Let me know in the chat. If they are buying more from Australian dollar, if they're buying more from Australia rather, which means Australia is exporting more, what happens to the currency? Obviously, they need to buy the Australian dollar to pay for those goods. And what happens when you convert to the Australian dollar to pay for the goods? It pushes the currency upwards, and the result becomes bullish for the Australian dollar. So imagine Australian dollar was trading around maybe 0.67 before this news. With this strong surplus, it could push higher, maybe test about 50 pips more or beyond. Okay, but here's what I want you guys to, and here's where I want you guys to think deeper. The strong trade numbers look good, but you shouldn't just look at the economic event and jump straight into buying Australian dollar. Because when you go to your charts, you'd see that the market may have priced some of the optimism. So what you want to do is to wait for that initial spike, wait for the whole drama to happen in the market, and then you can join in the clear direction with clear mind and clear sight. All right, so all I'm trying to say is wait for the pullback and getting at a good price instead of chasing the spike. Okay, so this is obviously bullish for the Australian dollar. Today's data is strong for the Australian dollar. It tells us the global demand for Aussie goods is pretty hot, and that's a positive sign for their economy. And as traders, our reaction should be to lean bullish on AUD pairs, okay? But with discipline and risk management. Let me know in the chat if you got that. If you got that, let me know in the chat. If you got that, let me know in the chat. So the next one is the consumer price index year over year for the, which would have an impact on the Swiss franc, and this has to do with Switzerland. Now the consumer, let me just close this. The consumer price index measures inflation, basically, right? How much the cost of everyday goods and services is changing. The central banks watch this like hawks, because if the inflation is high, they might raise the interest rate. If the inflation is low, they keep the interest rates low. Now, today's figure came out exactly as the previous and the forecast, 0.2. There was no surprise here, okay? But if you're being honest, 0.2 is still pretty low, okay? Most central banks want inflation closer to 2%. So this tells us that inflation in Switzerland is flat and almost non-existent. Let me know in the chat if you guys got that data. So we're not expecting the Swiss franc to move much because today's news didn't shock anyone. The Swiss franc wouldn't really move much immediately. So let me know if you guys got that in the chart. The next one is the retail sales for the euro year over year. We're going to talk about the eurozone basically. Now, the retail sales in itself measures how much people are shopping, right? So if people are spending more money in the stores, online, supermarkets, the retail sales would go up. If they're spending less, the retail sales will go down. Simple. Today's number came in at 2.2% growth, but it was expected at 2.4%, and the last time it was 3.1%. So what do we see? Spending is slowing down. Now, let me ask you guys, if people are buying less, What does that tell you about the economy? It means that demand is weaker. Businesses might make small money, less money, and the economy could slow down. And this is bearish for the euro. You can see it here again. I told you guys, pay attention to the last sentence. It says a high reading is seen as bullish for the euro, while a low reading is seen as bearish. We had 2.2% actual result today, which was less than the forecasted 2.4%, and obviously less than the previous 3.1%, way less than the previous 3.1%. And you know, weak consumer spending means that the ECB, which is the European Central Bank, has a reason to raise the interest rates. And when the interest rates don't go up, the euro doesn't get stronger. So this is a pretty much bearish data for the euro. And again, slower retail sales means weaker euro, bearish euro, just for you guys to keep that in mind. Let me quickly look at the chart and see if you guys have any questions for me. All right, guys, perfect. Remember, if you're just joining, welcome to the session. If you have any questions, use the live chat to ask me all your questions. I'm periodically checking the live chat to answer your questions. Up next we have, I said next. Up next we have the ADP employment change, which obviously you guys answered that correctly in the chat. It's going to impact or influence the US dollar, right? Now, the ADP report tells us how many jobs were added in the private sector. So think of it as an early information or an early peak before the NFP. I know most of you guys don't know this, so it's a good thing you're on this session today. You got to learn about this. Look at the ADP as an early peak, a sneak peek before the famous NFP report. Today's number, only 54,000 jobs added, which is less than the forecast of 65,000 and way lower than last month where we had 104,000 jobs added. Now I'm going to ask you guys, and I'm seeing the comments, I'm seeing that you guys are participating. That's amazing. It shows me that you guys are also looking forward to learning a lot today. And I'm telling you guys that once you get out of this session, you're going to leave with more knowledge than you had when you came on. All right. So I'm going to ask you guys the question and let me know the answer in the chat. If fewer people are getting jobs, as like you're seeing here, 54,000, previous was 104,000. If fewer people are getting jobs, what does that mean for the economy? Is it going to grow or is it going to fall? Is it going to be a strong economy or a weak economy? Let me know in the chat. If fewer people are getting jobs, what does it mean for the economy? If less people are getting jobs, what does it mean for the economy? Strong economy or weak economy? Let me know in the chat. If you know the answer to that, let me know in the chat, guys. Okay, Alimu says fall. Now, again, this sentence. A high reading is traditionally seen as bullish for the dollar, while a low reading is seen as bearish, right? 54 came lower than the previous, even lower than the forecast. So we had a low reading, which is seen as bearish. People with no jobs equal less spending power. Less spending power equals a weaker economy. So this is bearish for the dollar because it tells us that the labor market is cooling down. And if the economy is slowing, the Federal Reserve might not raise the interest rates aggressively. Okay, we can also bring it into trading and compare it with gold. Weaker jobs, weaker dollar, and gold rises. You guys can see what gold is doing right now, pushing even higher and higher and higher. Recently broke its previous all-time high record, and it's now trading around that zone at $3,550 per ounce. As you guys can see it happening, and it's even looking to go more to the top side. As long as if the dollar stays soft, it gives gold more room to climb up. So let me know if you guys got that in the chat as well. Let me know if you guys got that in the chat. So see this ADP or report or release as a warning sign that has told you be careful with buying the dollar on your pairs and watch gold closely for continuous bullish momentum. It's NFP tomorrow. I'm expecting more bullish run for gold tomorrow, but we'll see how that plays out. But let me know in the chat if you guys got the explanation. And finally, we have the ISM Services PMI, the Institute for Supply Management Services Purchasing Managers Index. You can read this, get the information, but this one is very important. The ISM Services PMI tells us how healthy the services sector is. Think about the restaurants, the hotels, healthcare, finance, all these businesses that are not factories. Now, today's number came in at 52, which is slightly better than the forecast of 51 and also higher than the previous month of July, which came out at 50.1. But the key thing is any number above 50 means growth. Any number below 50 means contraction. So as we're seeing it at 52, it means that the US sector is expanding, which is a good sign. So let me ask you guys a question in the chat. If the services are growing again, does that show strength or weakness in the economy? Let me know in the chat. If services are growing again, does it show strength or weakness in the economy? Let me know in the chat. If the services are growing again, does it show strength or weakness in the economy? Let me know in the chat. So this is bullish for the dollar because it tells us that the US economy is still holding up. Even if jobs are slowing, it's showing us that the businesses are still active, they're still hiring, and they're still making money. Now, here's how you should think as a trader. You should always connect the dots. The ADP has showed us weakness. The ISM is showing us strength. Which one will the market respect more? Now, usually the jobs market, NFP, the jobs market is king. But strong purchasing managers index means that the US is not collapsing. The US is still resilient. So if one report is weak, which is the jobs, the ADP employment change, and another one, which is the ISM services PMI, is strong, how should you trade? The answer is you don't rush. You wait for the bigger picture. In this case, the mixed signals tells us that the US dollar might not trend one-sided today, but rather tomorrow, NFP clears the story. All right. ISM at 52 is positive surprise for the dollar. But when you look at the weak jobs, the market may chop around. So you have to be patient and wait for NFP tomorrow. So just to give you guys a wrap on what I was talking about economically and looking at the calendar, the AUD is strong from the trade balance. The Swiss franc is flat from the CPI. The euro is weak from the retail sales, and the US dollar is mixed from weak jobs but stronger services PMI. We're going to see tomorrow when the NFP is out and we get an understanding of what the US dollar or how the US dollar is going to react, and we trade accordingly. Now, if you've got any questions concerning the economic calendar, let me know in the chat. I'm going to go over to my trading chart right now and we'll do some analysis. Look out for opportunities to take some trades and we'll see how that goes. All right. If you've got any questions, let me know in the chat. Guys, remember we called out this trade in the Octa Nigeria Telegram chart, and if you're part of the chart, you would know that the trade has moved about 35 pips in profit. Our first target is at 40 pips away from entry, which is going to be around 199.30, right? And then you can also adjust anywhere from here your profit levels, but our first target is right below this swing low, which I'm confident and comfortable about GBP JPY getting to that level from the look of things. But if we see any change in market structure, we would also update you guys on that. For now, we're stuck in profit. The market is moving nicely. We're just going to wait and see the market gets to our first TP. Our first TP is going to be around here. Just going to change this. Yeah. We're about 10 pips away from 10, 15 pips away from TP, but it's all good. All right, guys, questions concerning the economic calendar. And I'm going to go over to the charts, do some analysis. You guys, let me know in the chat, what pairs do you trade actively? So you can see and conduct analysis on that. What pairs do you actively trade? Let me know in the chat. What pairs do you actively trade? I expect most of you guys to say gold, actually. Whenever I ask this question, it's always gold, 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 gold. Guys, give it a break. There are a lot of, there are a lot of, there are a lot of instruments in the market, guys. Come on now. What pairs do you guys trade? Let me know in the chat. How do we know the list of news that can move the market? So you want to focus on high impact events. If you want to identify the list of news that can move the market, you want to focus on high impact events, and you can find high impact events from coming to advanced filters here. If these are checked in, you just uncheck them, click on apply, and then you'd only be shown high impact events. All right. See, a lot of you guys are saying gold. So before we look at gold, let's look at the dollar, right? Guys, the dollar is still bearish. We've been analyzing the dollar for a very long time now, and still pretty bearish, guys. We have this level as our key level as to where we would see potential bullish momentum on the dollar, but we've not, the dollar has not broken above this level and sustained that break. It's been trading below that, and it's safe to say that the dollar is still pretty much bearish. So we would not currently be looking for any buy momentum across any major pairs or any currencies that are paired with the dollar for now. Still pretty bearish. Moving nice, but still bearish, guys. Still bearish. Even though the momentum is beginning to slow down, but we've not broken above our major level here. And we can also identify this swing highs that are being created up here. I think I need to lighten this a bit, keep it very simple. Okay. So the dollar has gone to create new lower lows, lower lows, lower lows, and we're still trading below this level. So the dollar is still pretty low. If we see the dollar come down to create another lower low or make a retest here, obviously that's going to be our continuous indication that we should sell the dollar across all pairs, right? So keep that in mind. The dollar is still bearish. But the levels that I want you guys to focus on, the levels I want you to look out for before we change that bearish bias would be these zones. So we have the 99 to 100. So I want you guys to keep an eye on this zone. If we get the dollar to sustain a break above here and show us continuous bullish momentum, then we can start to shift our bias. But for now, it's all sales for the dollar. Okay. Now, for those of you that trade gold, and if you're wondering why the dollar is still bearish, the interest rates are coming down, right? We also have, investors being nervous because politics is finding its way into the imagine I'll just say politics is finding its way into the markets, and the jobs market are slowing as well. We saw the weak report from the jobs market. Tomorrow the NFP is going to be out. We'll still get more information on that, but ADP employment today showed negative data for the dollar. Central banks are choosing gold over the dollar. The gold rally is also pressuring the dollar. These are all the reasons why the dollar is bearish. And if you're familiar with statements from, Trump, you'll notice that all these things also bring about the shaky movements you're seeing in the market. The Fed is supposed to be independent, right? Just like a fair referee in a football match. But right now, the markets are worried that the referee is being influenced by politics, and it makes people lose confidence. If you guys know the referee I'm talking about, let me know in the chat. But uh these are the things that, or these are the reasons why the dollar is bearish, right? So if we look at gold, I see a lot of you guys also trade gold a lot, and we're seeing gold do amazing things. We're seeing gold, break barriers and push to the top side. Why is gold bullish? The interest rates are falling in the US, right? Gold doesn't pay interest. Normally, investors would prefer the US dollars or bonds because they pay something back, but now the rates are being cut, so those returns are dropping. And when returns fall, gold becomes attractive for investors. Keep that in mind. When returns fall, gold becomes attractive for investors. Let me give you guys an example. Imagine you have two banks, right, in Lagos. One bank, you invest 100,000, they give you 5K returns. The other bank, they don't give you anything. You pick the bank that gives you 5K returns, right? Now imagine that bank that gives you 5K returns on your 100,000 naira investment suddenly started giving you 500 naira returns. It's as good as nothing, right? You might as well just put your money in the one that can still grow and doesn't lose value, right? That's what investors, and that's why investors are running to gold. And we still have global wars, tariffs, government debt. Investors run to gold because gold has been trusted for thousands of years. It doesn't depend on any government. Okay? We are seeing central banks buy gold like how people buy rice in December in Nigeria. Countries like China, India, they're buying gold massively. And the more they buy, the less gold is available for the rest of us. And the price increases as well. The dollar is weak. I'm giving you guys the reasons why you're seeing gold push up. The dollar is weak as well. Gold and the dollar are like a seesaw, right? When one goes down, the other one goes up. And right now, the dollar is bearish because of the weak jobs and the expected rate cuts. And you're seeing gold push to the upside. And finally, momentum is also carrying gold higher. Once gold broke above the previous resistance, as you guys can see here, I'm going to zoom in and show you guys properly. All right. Once gold broke above its old resistance, you guys can see how strong this level was. And the more price test a level, the stronger it becomes. The stronger for a bounce, the stronger for a break. If you guys can remember in our previous sessions, I told you guys that if we break above this level, we're flying to the moon, we're going for a retest at our previous high and all-time high, which is exactly what gold has done. And guess what? We actually broke above that all-time high, and we've created another one. I'm gonna put this one here. We created another one over here as well. So you see, when gold broke above these resistance levels, most investors and traders started buying, creating some kind of chain reaction. Now everybody wants a piece, and that demand is pushing gold higher. All right, so these are some of the things that are making gold increase in value. If you understand it, let me know in the chat. If you understood the dollar analysis and the gold analysis, let me know in the chat. Now it's a bit late to hopping on a gold buy right now, just because we're seeing the market make some retracements. You don't want to get into buy trades when the market is still high, right? It's buy low, sell high for a reason. Okay, so if you're going to be buying, you have to buy at the lowest price. If you're going to be selling, you have to be selling at the highest price, right? And from what we can see, we're seeing the market begin to kind of pull back a little, right? You're seeing the market begin to kind of pull back a little, even though this is the lower time frames. If I go to the higher time frames, you still see rejections. I'm going to show you guys right now. You see rejections forming. Even the most recent candlestick giving us price action is showing us that the buy momentum is beginning to slow down. You're seeing the bears, pushing. This is not a good time to hop in on a buy trade on gold right now. I'd say wait for that pullback into this zone, and then we can start to anticipate more upward movement on gold from these levels that I've just indicated, all right? Or if we break above the all-time high and then, just like we did here, breakout retest, sweet opportunity to hop in on a buy because of this key level that we have here. I always tell you guys about key levels and how it's important for you as a trader. Just by understanding breakout and retest and the market respecting key levels, you'd have capitalized on a trade here, breakout, another one here as well, and made really good profits potentially. And it's the same thing I'm telling you guys to do right now. It could take some time, but you're building confidence as a trader. You want to be able to enter trades with confidence, all right? All right. So indecision candlestick is being formed. I'm going to delete this so you guys can see it clearly. Indecision candlestick is being formed right now. Buy momentum is beginning to slow down a bit. This doesn't mean that the buy or the bullish one is over. It just means that when you run a marathon, you have to just calm down, catch your breath, slow down, and continue again. That's what's going on right now. So we want to see how gold reacts. We don't want to trade in this range, right? It doesn't give us that confidence, and it's not really ideal to trade in this range, right? We want to trade when the market has returned to its key levels. We observe how they act on those key levels, and we react as traders. Let me know in the chat if you guys got the gold analysis and the dollar index analysis as well. Guys, let me know in the chat if you guys got the gold analysis and the dollar index as well. Now, if you don't understand what these lines are, it's basically my zones, key zones, minor zones, major zones. Imagine the market is like a battlefield between the buyers and the sellers, right? Now, instead of trying to look at what's going on with every candlestick, you just focus on the zone and see what the market does, because this is where the two armies are likely to clash. This is where buy and sell will clash. They clashed here as well. You can see how much of an importance or important role this played on gold. We had the nice breakout, the retest, boom to the upside. This was a previous resistance that came back to form support, and it keeps happening. It keeps happening, guys. It keeps happening. Most of the lines you see here now are on the lower time frames, right? I think I should even take them out maybe after the session, but just focus more on the key levels on the higher time frames. We have the demand zone, which is going to be where buying pressure, just like here, where buying pressure is strong. We have the supply zone, which is where selling pressure is strong as well. If you've got any questions, you can go ahead and ask me your questions. Right about now, I'm going to give you guys some tips. The month just got started. Welcome to the month of September. It's the 4th day of September, actually. It's the first week as well. How you start this week would also determine the momentum you would use for the rest of the month. I'm going to give you guys 10 tips that can help you start September with momentum. All right. Okay, so the first one would be, and again, guys, if you have questions, let me know in the chat. Okay, I'm going to look at the chat. We're going to get to the Q&A section, and I'll answer all your questions. All right. Okay, 10 tips, great tips to get you started for September. Now, you have to start the month with a clear plan. Don't jump into trades blindly. Write down your goals, whether it's to grow your account by 5%, 10%, or to stay consistent and disciplined. Start with a clear plan. A trader with no plan is like a sailor with no compass. All right. Risk small, live long. You can, especially for beginner traders, as long as you're getting started, risk 1 or 2% of your capital per trade. If you're getting started in this business, your job is survival first and profits second. If you blow your account too early, you can't even continue the business, right? Respect supply and demand levels. The market provided supply and demand levels or support and resistance levels as stop signs. So always mark your key levels before trading. And when price reaches these levels, that's where you make smart decisions. The fourth tip would be don't fight the trend, right? Before you trade, ask yourself, is the market trending up, trending down, or ranging? And you trade accordingly. You know what they say, the trend is your friend until it bends. If it has not bent, don't go against it. I mean, you can make a profit, but you won't be comfortable trading against the trend, and it'll just be a short-term kind of opportunity that you want to grab. All right. News moves markets. We just did that. We looked at the economic calendar, and I'm telling you guys, keep your eye on the economic calendar. Major events like NFP that's going to be out tomorrow, CPI that's going to be out next week, and the Fed speeches. These events can shake the markets. So you don't want to get caught unprepared. Keep an eye on these events. Check the economic calendar every day. Identify what's going to be happening that day before you analyze trades. And you have to also remember that one good setup beats 10 bad ones. You know what they say, patience pays. Wait for clean setups that align with your strategy. It's better to take one solid trade a week, two solid trades, three solid trades than just taking 50 random trades a day. Journal every trade. Write down why you entered, how you felt, how it played out. Don't just write the results, profit, loss, profit, loss. You also have to write down how you felt, how you played out, and you have to do this over time until the journal becomes your personal trading book, your personal trading Bible. All right. Learn to accept drawdowns. You have to see these drawdowns, even if the trade closes in a loss. These are tuition fees in the markets. Learn from them. Don't cry over them. Study them. You can ask yourself the question: was it my strategy? Was it discipline? What happened? I want to learn from it, and that's exactly how you grow in this market. The next thing you want to do is to protect your mental capital. If you have 3 unprofitable trades in a row, you can step away. Don't revenge trade. Remember, trading is 80% psychology and 20% strategy. And finally, guys, end your trading day with gratitude. No matter how your trading day was, profit, non-profit, always end with gratitude, because consistency in calmness builds long-term success. Not emotions, not greed, but consistency in calmness. All right, let's see if you guys have questions in the chat. If you have questions, let me know in the chat. We are now at the Q&A session, or section rather. Why do I keep calling this session? We're now at the Q&A section of today's live trading session, and I'll be happy to take your questions. And while you ask me your questions, if you don't have the app already, you can go ahead and download the Octa trading app. The link is going to be in the description and also in the live chat as well. The app offers a wide range of instruments with low spreads, fast execution, and zero commissions. It also has various educational resources like this one you're on, also the ones you can read as well, 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it this far, congratulations. Now you have a promo code that can give you a 100% bonus on your deposit. Ambrose E100, that's the promo code. You can use it when you want to make your next deposit or your first deposit, and you would get a 100% bonus on that deposit. Open your Octa Trading app or the website, the official website. Go to your profile, find the promo code section in the menu, and type in Ambrose E100 and click on activate. You can make your bonus, or your deposit rather, and enjoy your bonus. You'll be notified on the volume you need to trade before you withdraw your bonus to your trading account for more trades and more profits, or to your bank account if you like. All right. Right about now, we're going to look at, I'm going to look at your questions. So ask me the questions, guys. I'll be happy to answer all your questions, right? If you've got questions for me, ask me the questions. Let's see. I'll be happy to answer all your questions, right? Okay, someone said, I only understood the gold analysis, so you probably don't understand the JB, what's it called? Dollar index analysis, right? I was going to say GBP, JPY, because we just caught out a signal on that is doing pretty good in the market. But for the dollar index, guys, I said we're still bearish. The dollar is still pretty bearish. I told you guys, as long as we keep trading below these levels, our bias doesn't change on the dollar. We're still bearish. Obviously, if you see the dollar come to make a retest here, or even potentially create another lower low, then it increases our confidence in the bearish dollar. All right. Can you please check again and explain GBP USD? I don't think I explained it the last time, so let me just do that right now. I haven't looked at GBP USD in a while, even some days, but let's see what we have here. Again, dollar pretty bearish, but we're seeing the GBP USD. And guys, this is why key levels are important. Okay, this is why key levels are important. Most of these levels I can just extend, and it gives me an idea on where this market could potentially retest, where there could be a clash between buy and sell, and I just react to whatever happens at those levels. But right now, we can see that the bullish momentum on GBP USD is beginning to slow down. As a matter of fact, we're seeing the market form this nice looking head and shoulder pattern, right? Obviously, let's take this to the side, right? Obviously, when this pattern forms in the market, it's a reversal pattern. It just shows you that momentum is beginning to slow down. It could be the double top, the triple top, the head and shoulder. These are patterns that tells you buy momentum is beginning to slow down, but you can't really start calling this a bearish market just because we haven't broken below this major level that will serve as the neckline, and also this level here that serves as our strong support for the bullish GBP USD. So if you're trading GBP USD, what I'm going to say is the market is trading at a key level today, right? Well, we want to see if this bullish momentum continues, and then we can join in that bounce and trade GBP USD all the way to this top side. Or you can just wait for the market to push back down a little bit. But basically, at this key level, it's not ideal to just open a trade right now because we're looking at the market react to a key level. We're not seeing any momentum here for today. It's just a reaction basically. And with key levels, you want the market to finish acting and then you can react, okay? If we were trading around here, and then it will be a nice opportunity to hop on a buy trade. As a matter of fact, I'll just give you guys indication on the locations to expect buy momentum, which is going to be these zones. So we have 1.31. So these are the levels where I'll be more comfortable to look for buy opportunities in the GBP USD market. But if you're a scalper, well, you want to go to the lower time frames, obviously. But GBP USD is looking weird today. If you were trading today, you'd see that there was no strong movement, no strong trend, like I told you, even just by looking at daily time frame. So you'd see that this is not tradable, right? It's definitely not tradable. But if you're a scalper, you want to take trades, you can pay attention to the most recent support that we have on GBP USD, and it's likely that this market is going to come down to test this support. So you can capitalize on that obviously tomorrow, because NF is going to be out tomorrow. This is going to cause some impact to this market. So pay attention to what GBP USD does here, and then keep an eye on this level because GBP USD might potentially make a retest here tomorrow. So for the person that asked in the chat, let me know if I answered your GBP USD analysis correctly. Like if you understood it, that's what I mean. I have a proven, this is from Al Hassan. I have a proven strategy, but I always lack discipline, patience. As a result, I always go against my strategy. Any tips? Well, you've covered about 50% of the difficult part of trading, right? Getting a strategy that works. The other part now is more about psychology. Okay, now one of the ways you can actually overcome this is to have a clear trading plan that you would stick to. You look at the times where your strategy works. If it works in the London session, but it doesn't work in the New York session, you don't have to force it. You don't have to force it to work in the New York session. You stick to what works. If AEDJPY works for you in your strategy, you don't have to try that strategy on gold if it doesn't work on gold. You don't have to force it to work on gold. The market is about doing more of what works for you. So if you get a plan, your plan should include the sessions you should trade, the pairs you should trade, with that proven strategy and you stick to it. If you have take profit and stop loss levels that you've indicated, you stick to it. That way, you've made a step into improving the rash decisions you would make and indiscipline as well. Okay, someone's asking another question, but isn't there support over there in GBP USD near 1.34150? Let's look at that. 1.34150. This is not really this. I can only call this support if you're going lower, like right? Previous resistance support, that's if you're going lower, like to the 15 minutes, right? It holds. If I extend, you'd see the reaction here. But the 1 hour time frame, this is stronger just because I have this wick here. This we call it a wick or a shadow, whatever you want to call it. This is stronger for me. I'm more comfortable to buy here than to buy from here. All right, but you can call this support. It's served even on the lower time frames, like the 15 minutes, the 5 minutes time frame. But I'm looking at the bigger picture here. And then we have resistance up here that I can even extend to this point, right? Let's make this a bit thick. So if you're calculating based on major support and resistance of once identified the range, we're going to start from here all the way to this point, right? This is pretty minor. You can identify it as your support, but it's a minor level within the highs and the lows. That's what I mean. So let me know if you got that. I think the question was from Nawab. Let me know if you got that in the chat. All right, guys, let's see if we have any other questions. And I'll take one more question and we can call it a night for today's session. Okay, this is from Alimu. Do you trade based on sessions? Yes, I do. I trade based on sessions because I have seen a lot of times that the markets, are usually volatile during active sessions, like the London overlapping into the New York session, Tokyo session at night as well. These are good times that I execute trades. So yes, I trade based on sessions. All right, guys, this was an amazing live trading session. September is a new month, and this new month brings new opportunities. Remember, you don't need to catch 100 trades on every move. You only need to catch the right ones. So trade smart, manage risk, and let discipline be your edge. Thank you guys for joining, and I'll see you in the next one.